There's no doubt that the real estate market is red hot right now, and if you're a homeowner, you've probably been considering whether or not to sell your home. But before you rush out there to sell your home and list it for much more than what it's actually worth, simply because you heard somebody else get an offer that was thousands of dollars above their asking price, consider some of these reasons not to sell your home, because not considering them could actually cost you a couple thousand. Now, this goes without saying, but everybody's financial situation is different. What may work for me may not necessarily work for you. Let's say you're in a situation where your home has doubled in value and you have student loans, credit card debt, and selling your home would actually drastically change your lifestyle versus somebody living in a home where their home hasn't appreciated as much. Obviously, you're going to have to tailor this financial advice to your own specific goals and needs, even if the advice isn't necessarily coming specifically from me. But as always, if you have questions about your own specific situation and you want my input, feel free to comment down below and I'd be more than happy to respond. Now, the first reason to reconsider selling your home is if you're only selling your home because you want to capitalize on the fact that real estate prices are skyrocketing. It can be pretty tempting if you buy your home for $100,000 and you see all the homes listed around you selling for $150,000. Having that $50,000 in your pocket would be really nice. But there are two main points I want to make. First, you don't necessarily have to sell your home to benefit from the fact that your home has appreciated in value. You could have a cash out refinance, and not only would you end up having more cash in your pocket, you could use it for a lavish vacation or whatever you want. It's your money. But secondly, you can actually still benefit too from having lower interest rate, saving you thousands of dollars over the course of that loan. And while a cash out refinance could extend the life of your loan, or in some cases cause you to make higher monthly payments, the reality is it can still be beneficial, because if you're looking to make a large purchase on something like a credit card, or you're having to take out an auto loan because you're interested in buying a new car, and the interest rate is much higher than what you would find in getting that cash out refinance option, then it could actually still be worth it. Now, the second major reason why I'm opposed to people selling their home to benefit from the fact that their home is appreciated so much is most people just take that additional funds and just end up buying a bigger home with that. And I'm not necessarily opposed to people buying a bigger home, but a lot of people forget that a bigger home comes with more expensive repair bills, more things to maintain, more headaches just overall. And so most people just see that they bought a home for $300,000, now it's worth $350,000. So that means that they can sell that home and afford a $350,000 house. Plus, the other thing to consider is if you're selling your home because homes in your local area have appreciated and value so much, the reality is whatever home you buy in that local area is going to be equally expensive. You're paying a premium price for that home. So sure, your home is valued a lot higher than it normally would be, but you're paying a lot more for other homes anyway. And here's a bonus tip for you. You want to shorten the window as much as possible between when you're selling your home versus when you're actually moving into your next home, especially in an area where home values are quickly rising. The reality is you don't want to end up in a situation where you have your home listed for sale and you have a contingent or you have a closing date that's 6 months out, and so that gives you enough time to go look for a home. But yeah, home values are still rising quickly for those 3 to 6 months that you're looking for this next home. So you have a situation where you sold your home at prices that were 6 months ago, and that could have been, you could have got a better offer, maybe 10%, maybe even just 5%, but on a $200,000 house, that's a significant amount. You're still paying the premium price 6 months later for that house you're moving into, but you're not getting that benefit from the house that you're selling. Now, the next reason you should reconsider selling your home is if you just recently refinance. A lot of people refinance to take advantage of lower monthly payments, or some people are moving from a non-conventional loan to a conventional loan, and in a lot of cases it can remove different types of mortgage insurance. But most people end up refinancing their mortgage to take advantage of lower interest rates that over the life of the mortgage is going to save them tens of thousands of dollars. But once again, that's over the life of the mortgage. Here's the catch. With any mortgage, or really any type of financial loan, you end up making monthly payments at the beginning of the loan. The majority of it is applied to interest, not necessarily the principal. You could actually end up in a situation where you refinance your mortgage to take advantage of lower interest rates, but you end up selling your home within a year or two, and you actually would have ended up saving thousands of dollars had you not refinanced your mortgage at all. To give a simplified example of what I mean here, let's say I'm well into a number of years into the life of my mortgage, and every $1,000 monthly payment I make ends up being $500 applied to interest and $500 applied to the principal. But let's say I end up refinancing that mortgage, and now my monthly payment is $900. That is a lower monthly payment, but maybe 800 of that is actually getting applied to interest, and only 100 of it is actually going to principal, building that equity, which, if you're a homeowner, that that's one of the biggest advantages of owning a home is you're building that equity. Plus, don't forget, a lot of banks end up adding a processing type fee, and sometimes you don't even necessarily know it because it's not necessarily a charge up front. They actually roll it into the mortgage so you don't even notice it. Now, another situation where you want to reconsider selling your home is if you don't have anything to do with the additional cash you're going to have if you don't have any other investment opportunities in mind. For example, if you're thinking about selling your $300,000 house to downsize to a $150,000 house, or even just sell that $150,000 house to move into something like an apartment, if you just put that money in a savings account or even a CD, at best, you're probably getting 1 to 2% return. But if you kept that value in home equity, we know that on average, home values appreciate 3.5% year after year. So if you're getting 2% return on a savings account versus 3.5% for the home appreciation, that 1.5% difference may not necessarily seem like a lot, but when we're talking about thousands of dollars, like a $150,000 home, and selling that $150,000 home ends up being $2,000, a little bit over $2,000, just on that 1.5% difference. And that's just 1 year. Year after year, that begins to compound and accumulate. So that difference really adds up. So what I really highly encourage everybody to be thinking about is if you plan on downsizing your home or just selling it all together, really make sure you have a plan where you're going to put that money, how are you going to invest it. You worked hard for that money, so you want to make sure that money is working hard for you. Now, another situation where you may want to reconsider selling your home is if you're buying another home just to relocate on the other side of town, or just to upgrade your home, but it's simply down the road. Perhaps consider holding on to that second property and using it as investment property. Now, I understand that's not necessarily for everybody, but especially if you're just somebody that holds money in cash or CDs or some kind of savings account where you're not necessarily getting the best return. Like I said before, at a minimum, you're getting 3.5% on that return from the home appreciation, just that alone. Now, that's not necessarily even considering the fact that you could turn into a rental property and actually getting that cash flow, which can definitely be key to, building your equity, building your wealth. If you're interested in a future video about how real estate compares to other investment opportunities or other asset classes, just hit that like button. That way I know to make a future video on that, or just to show appreciation. I would definitely appreciate it a lot and would help promote this channel. Now, another situation that's a little bit more unique, but you definitely would want to reconsider selling your home, is if you end up incurring a huge tax liability because you ended up selling that home. Now, I'm kind of simplifying here, but there's kind of two main situations where you would end up having a tax liability because you end up selling a home. The first being is if it's not necessarily your primary residence. The second is as a single individual, if you ended up profiting $250,000 or more on that home, or if you're a married couple, then it would be $500,000, and that's a profit. So if you put any expenses onto improving the house and upgrading it, then that would offset that profit amount. So $500,000 for a married couple, $250,000 for an individual. That's a lot of profit. That's not necessarily going to be the case for a lot of people. But in general, you definitely want to make sure that you're not going to have a huge tax liability by selling your home. Especially, you don't want to end up in a situation that your profit that you end up having because you sold your home that you're really excited about ends up kind of being offset because you end up having this tax liability. So it's definitely something you want to look into. Now, last and final situation where I highly encourage people to reconsider selling their home is if you're ending up relocating and buying a new home in a different city or different state because of a job opportunity or perhaps some other kind of opportunity. Perhaps you're marrying somebody in a different state and you're moving to go move in with them and you're selling your home where you currently live. The reality is, in this situations, you don't necessarily know how they're going to play out. Perhaps it doesn't work out the way you expect. And if you ended up selling your home, let's say in Dallas, and you already bought a new home in, let's say, Tampa, you can end up being in a position where you realize you don't necessarily like this new job, but you need the income level to sustain that new house that you just bought. Now, what I highly encourage people to do, if it's an option at all, is to rent out wherever you currently live rather than sell that home. Let's say you live in Dallas, rent out that place if it's an option at all, and then consider renting wherever you're actually moving to. Once again, let's say you're moving to Tampa, consider just renting, which I know a lot of people aren't necessarily in favor of because you're not necessarily building that home equity. But if you're just renting for 6 months or even a year, just to make sure that you actually really like this job and that they actually like you. Perhaps you start working there and you love the job, but they don't necessarily love your work ethic and they end up letting you go. And now you end up having this home that you can't afford anymore. So consider just renting for a little bit, just for the time being. And that's a small price to pay, considering the fact that if you do end up buying a home and end up getting laid off or whatever the situation ends up being, that's going to be a way bigger price to pay than renting for 6 months. If there are any situations where you think people should reconsider selling their home that I missed, feel free to comment down below, especially if it's like a personal experience and you don't necessarily mind sharing a situation where you kind of learned the hard way. Share that advice so that way people can learn from it. And if you appreciate these real estate type videos, or if you like personal finance, please consider subscribing to the channel. And as always, I sincerely thank you all, and I hope to see you in the next one. And I just wanted to give a special thank you to everybody that's already subscribed to the channel. I can't believe we're more than 1,000 subscribers already. A huge thank you. And as always, I'm always open to suggestions questions, feel free to comment down below future videos that you're interested in or things I can improve upon. I'm always open to critique. And as always, like I said earlier, hope to see you in the next one.